A very good evening, ladies and gentlemen. It's exactly 3 p.m. and I would like to welcome you all to another session of the Colombo Stock Exchange's webinar series. And as you all know, I would like to remind you our theme for the evening is gearing up during challenging times. So this is the third session of the webinar series that we've organized, and we've been constantly going forward with this webinar series, and in the future also we intend to continue the series at least once in 2 to 3 weeks, depending obviously from the availability of the company representatives as well. My name is Dimanta Matthew, and I will be your host for the evening. So, as our theme suggests, basically, you all know it is challenging times for all of us. And undoubtedly, we need to look at what items need to be clarified or taken up in your investment decisions. So currently investors have to deal with multiple factors. It may be policy uncertainty, it may be economic uncertainty. Today we have the budget, what kind of reforms are going to come, and when are those reforms going to come, and in terms of taxation, what additional taxation might come in the future, how are the IMF discussions going on, are we going to sign the IMF staff level agreement this week? So lots of questions for investors. So on the stock exchange front, we thought that it might be great to hold this kind of webinar series as least to clear out part of these challenges that the investors face for you that who are looking for the long term. We have a few companies lined up where you can decide on investments into the long term. And with it, we would like to go into a couple of videos first. Of the sponsors and the Colombo Stock Exchange. The sponsors for the evening are First Capital for this webinar series. Let's go into the videos.
The world is speeding up, and Sri Lanka is progressing with it. Succeeding in this time requires innovative strategies and a performance-driven mindset. For over 35 years, First Capital has put performance first in everything we do. We have optimized every aspect of our operation to deliver the highest performance and results to our stakeholders. As we march into the future, we are committing to elevating our services even further, moving forward with what we believe in to provide you with a premium service, delivering on our promises, finding the best solutions for our clients, going above and beyond to deliver value, and upholding the highest levels of professionalism. Rest assured, every step of the way, we will deliver performance first in everything we do. First Capital, performance first, always.
Welcome back, ladies and gentlemen. So in this webinar series, let me explain to you the structure of the webinar. So we've lined up three listed companies that will be doing presentations today. And then the session will be followed by a panel discussion. Let us not wait and straight away go into the presentation. Firstly, we've lined up Hemas Holdings PLC, and the presentation will be done by Mr. Salmi Fasil. And let me give you a brief about Mr. Salmi Fasil. Mr. Salmi Fasil was appointed as the Group CFO of Hemas Holdings with effect from 1st September 2018. He has served as an executive vice president heading the finance, legal, and IT operations in Saudi Cable Company, Saudi Arabia, between 2013 and 2017. He served at Savola Group, Saudi Arabia between 2000 and 2013 in various roles, including that of Executive Director, Group Treasury, CFO of edible oil subsidiaries, head of finance and IT at United Sugar Company, and head of finance shared services. He started his career at Pfizer Sri Lanka, currently known as Astron Limited, in 1984. And with it, I would like to hand over proceedings to Mr. Salmi. Salmi, over to you.
Thank you very much, Dimanta. Good afternoon, everybody. I firstly have to apologize for the fact that I was expecting our Group CEO, Kasturi Chellaraja Wilson, to be joining me on this call today, but she is unfortunately taken unwell and will had to go back home a little earlier than planned today. If I can have the presentation running up, Dulci, thanks a lot. So those of you on the call, as you probably know, Hemas is no stranger to the market, both in the country and also, in fact, in the region. We have focused our interest in consumer and healthcare. We have operations that currently cover Sri Lanka, Bangladesh, and India, and all these locations are managed and operated by staff local in that particular country. Revenues come to about 60% from the healthcare segment, and the balance 35% coming from consumer. Under healthcare, we have a couple of subsegments. We have 2 hospitals in the Greater Colombo area, one in Thalawattugoda and one in Wattala. We also have the pharma distribution and manufacturing segment, being the largest private player in the country. Home and Personal Care Sri Lanka has many leading positions in many key categories. The portfolio consists of well-known household brand names such as Baby Shermi, Clogard, Diva, Kumarika, Dandex, and Velvet, amongst others. I'm sure most of you have in some time in your lives been touched by one or two of these brands at the very least. We also have international operations covering the home and personal care segment that includes Bangladesh, where we have the operation and export arms of the business. Bangladesh covers hair oil and exports mainly regionally to over 15 countries. The consumer segment also has probably the household name in Sri Lanka, Atlas, the stationery brand name, where we have a significant share in the country. We have a smaller arm on the side that supports the 2 main core businesses, the healthcare and the consumer segments, and that's the mobility sector, where we have the GSA for both Evergreen and Emirates. If I can go to the next one. I wouldn't spend too much time on the macro economic conditions in the country. I'm sure all of us on the call, around the call, are aware of what's currently going on, basically in the country and in the region. We have seen the CCPI increase for the 10th consecutive month to reach 60.8% year-on-year in July, with rising food prices and non-food prices as well. Global commodity prices, however, we saw a slowdown on a quarter-on-quarter basis. However, the prices for all key commodities such as palm oil and paper are still approximately 50% higher than the same period last year. The political and economic instability impacted businesses, as we've managed to continue our operations with minimum disruptions despite the supply chain constraint. US dollar liquidity constraints and the shortage of essentials still continue to have an impact in our operations. Despite multiple initiatives, including import rationalization and restrictions on repatriations from foreign exchange of the country, the rupee continued to depreciate to reach 360 at the end of July. An 80% devaluation from both the December 2021 rate of 201 and the July 2021 rate of 200. This rate, as we all know, is currently being managed by central bank, and it's a little, concerning to see that we still see the rupee continuing to be under pressure. Interest rates have risen by more than 3 times during the year, and 2 times within the quarter. AWPLR, for example, has risen to 23% in comparison to June 2021. There's a rate of 5.7%, and the rate of 8.3% in December 2021. On a fiscal policy perspective, we saw multiple reforms being announced, including the VAT rate to 15%, which we've just probably seen being announced in Parliament, and corporate taxes going up to 30%, up from 24%. Personal income taxes are also revised as an effort to increase the government revenue. Whilst we understand the need for policy reforms to recover the economy, these will further impose pressure on both the consumer and businesses in the short term to medium term. On the current situation during the quarter, as we all know, there are the infamous default on external borrowings, which led to the downgrade of the country's long-term credit ratings to restricted default. This, coupled with unsustainable debt obligation, deteriorating forex exchange reserves, and the country's economic recovery, will depend very, very highly on a successful implementation of an IMF program. As we speak, IMF is in Colombo. We've seen some announcements coming out that we're very close to reaching a staff level agreement. Fingers crossed, we hope that we will hear some good news soon, and we will see the government working towards that end. Fuel shortages and power cuts are still very much present. We have seen queues starting again to form near petrol stations, and this is a sign that is not very good, which we hope, after listening to the energy minister, saying that this is short term and hopefully will be resolved very soon, maybe within the week. On the next slide, Dulcie. Yeah, so some of the key strengths that we have, again, like I said, HEMAS is not new to you. We have corporate governance at the highest levels. In fact, from my experience in working overseas for multiple listed entities, I haven't seen levels of governance as high as what we see at HEMAS today. We have foreign non-executive, both foreign and local non-executive directors who have a very big say in the way the businesses at the board meetings are run, very different backgrounds, and purely all decision making is based on a governance perspective. On the plus side, we also have operations in very defensive sectors which are resilient despite the market volatility. As you've seen our results that we published in the first quarter, we saw good growth both compared to year on year, and even on quarter, we did see us gaining some share in the market as well. One thing that is quite strong in our balance sheet is the low gearing level that we have. We also have a long-term credit rating of AAA stable that has been published by Fitch. It's a position that we continue to invest, which helps us to sustain and meet the headwinds, especially in the form of working capital requirements, and also continue to look for opportunities to invest in mergers and acquisitions that fits it within our portfolio. HEMAS is successful because of our win-win relationship with our stakeholders, whether it's the key pharma principals, the strong supply chain partnerships, the banks, the regulatory authorities, and everyone who works closely with us to help us strive forward. On the strategy and creating value, our short-term plan is to grow market share. We believe that we still can continue to grow market share, especially in the current environment. We see market share growing in key categories of home and personal care and Atlas. We also will develop value-creating products. We continue to invest heavily in R&D, and have done it done multiple launches to cater to the ever-evolving customer needs. HPC Sri Lanka recently, I'm sure you are aware, launched Vivia, which was an affordable and mid-weight range and a mid-weight range product for Diva, which is 700-gram pack, I think, and Klogard variants such as Natural Salt and Pancha Shakti, with also new Baby Sharmi launches. In the international front, we saw Bangladesh launching Eva by Kumarika and also the personal care soap Actisem. Atlas launched its unique triangular pencil and also has recently launched the learning platform targeting grade 5 kids, which has gained a lot of traction. The flagship plant, the pharmaceutical manufacturing plant that we have under Morrison, has commenced manufacturing operations and has also already started putting products, branded generics, into the market. Empha tablets, which is 10 and 25 milligram, was launched in 2021. Bisulfurol tablets, BP 5 milligram 250s, and Rosustatin, which is also known as Crestor. We have just launched a 10 milligram 30 blister. We have also launched a chlorpheniramine maleate product, which is a 4 milligram hundreds blister pack recently. All these products have had huge traction in the market, and we're very happy with the progress that these have made. These have made high demand products being made more affordable and easily accessible to the people in the country. We continue to supply the government. We do still face challenges in the form of the buyback agreement, but we are working around that to make sure that Morrison will maintain and achieve its targets as we grow. Expanding in the regional footprint, over 70% growth in export revenues. High focus has been on internationalization with Atlas and home and personal care taking the lead. On the mid and the long term, we look at did I miss something? Sorry, yeah. We also have looking at maintaining an optimum liquidity position. One thing good that Hemas has done, and actually has done with a lot of success, was having a very strong centralized group treasury function, which obviously then helps us leverage the size and the strength of Hemas to support all its subsidiaries within the group. On the long term, we are continuing to have acquisitions and expansion in consumer and healthcare. We're looking for multiple opportunities, and we have headroom to invest with minimum balance sheet pressure. Atlas's transition from stationary manufacturing to a learning platform has started paying some dividends that we have started seeing in that particular area. Sorry. We continue to expand our global footprint in the pharmaceutical exports. We're talking to principals where we could do contract manufacturing with long-term strategies to export to the EU using our EU GMP registered plant at Homagama, the new plant that we have at Homagama. We also have plans to re-enter the logistics space, which we will once we get the right opportunity. Next one, please. I think the slide has got stuck, or sorry, we seem to be having a technical point. Okay, yeah, we just managed it. Our strategic building blocks, as you can see on the screen, we will continue to focus on building from the core. We will accelerate current business efforts to drive higher value in the core businesses. This is what we are good at doing, and we're doing it well. We'll also focus on underlying volume-led growth and market share improvements, something that we have been continuing to do throughout during these challenging times. We also are looking at new from within the core and the adjacencies, capturing new revenue streams to further strengthen the core, continuous efforts in catering to evolving needs. New product revenue, for example, in consumer brands for the quarter was from 13%. contributed 13%. We have attractive targets for breakout in growth. For example, we have Vivia that we have just launched, and we also have the Gold men's range. I don't know if you remember. Gold was a brand that we had lost a little focus along the way. We brought it back, revitalized it in the current situation, and making good inroads in making that thing grow, making that brand grow. Efficiencies and effectiveness. We also, before that, we also have the new businesses and internationalization, where we will explore attractive opportunities in new spaces and in international markets. So that's a segment that we are continuing to focus and make sure that we grow that and grow it well. While we're doing all this, we'll continue to be efficient in what we do and enhance productivity to further enhance capacity and improve growth. On the next slide, if I may. Right. So as you can see here on the screen, we have a snapshot of some of the products that we have. On the right of the screen, you can see some of the new products launched by Mori. And on the left, we have some of the products that have been done out from the home and personal care segment. Next slide, please. Right. On Atlas, we have the curriculum development and the lesson planning platform by trusted educators. We have also, like I said previously, we have targeted and launched it out for the grade 5s. And we are also, on the other side, we can see that we have commenced commercial production of our UGMP compliant plant. So for the financials, I mean, this is where everything boils down to in the end. As you can see, it's the numbers here are exorbitantly very good, but then we're comparing with a fairly low base in the first quarter last year. As you probably know, it was a terrible memory to have. We've all, right in the slap bang in the middle of COVID. We had restrictions and all kinds of things impacting us. So overall, we still have good growth, good recovery. Our debt to equity ratio went up slightly, but then that was mostly fueled because of the growth that we had both in the healthcare and in the consumer segment in terms of working capital requirements. But overall, the financials show a very strong and healthy position of the company, with plenty of room for it to leverage its balance sheet and use a war chest if needed to make good acquisitions to expand and grow our business. I'm not going to read numbers off the screen because I think you probably will have access to this presentation anyway. So I'll just talk briefly on the segments now. On consumer brands, so that's the second highest contributor to revenue, both with over 30%. Operating conditions, other than the massive inflation that we saw, remain favorable with low impact from the pandemic, and the schools operating as usual until the end of the quarter. As expected, commodity prices, exchange impact, domestic inflation, I mean, whatever could go wrong went wrong in the environment, impacted margins, and the sector had to work with multiple strategies to minimize not only the margin pressure, but also to reduce the burden to the consumer. It's very easy to pass on price increases if you really want to, but we also have this duty of care that we should make sure that we manage and operate as efficiently as possible and reduce the burden as much as possible. Price changes were done, but they were done very cautiously, taking into account the impact both on the consumer and also on how much the market could actually sustain. On healthcare, that's the highest contributing segment. The contribution to revenue, profits, and was around 60%, while the country faced challenges in terms of shortage in medicine supplies. We still managed to ensure to work with our principals to ensure continuous supply. We did see a slowdown in COVID-related revenue as expected, which is thankfully behind us now, hopefully. However, our core growth for hospitals was commendable. So we saw hospitals going back to before COVID level of operations. Both our pharma manufacturing and distribution arms marked key milestones. Hemas Pharmaceuticals was recognized by Bureau Veritas as a company with good distribution practices, and the flagship manufacturing plant at Homagama commenced commercial operations during the quarter. On mobility, revenue and capital employed contribution is less than 5. Like I said, this is a small arm. It's a support arm for the business of the group. Year-on-year revenue degrowth was mostly because of the divestment that we did in Spectra, as we announced in October last year. Both aviation and maritime segments saw challenges with shortage in fuel, elevated fare, and reduced volumes at the Port of Colombo. This is a part that is, I think, of the entire presentation, which is very close to our heart. You know, we whatever we do, in the end, we end up giving back to society. Hema's focused on supporting our communities by creating a social security safety net to communities affected by the economic crisis. We partnered with UNDP-led private sector giving facility to ensure that vulnerable communities had access to essential and near essential medicines. We partnered with a few like-minded corporates and launched Medum Mehevera, an initiative committed to provide dry ration packs to 100,000 adversely affected families who are facing hardship as a result of the economic crisis. The Feeding of the Future project, with assistance of the early childhood care development officers around the island, provided nutrition packs valued at 25 sterling pounds each to 367 families from 15 of the worst affected Piyawara schools in Vaunia, Mullaitivu, Kilinochchi, Monoragala, Mana, and Ampara. This is a program that we did with one of our partners out from the UK, where contributions were collected from the UK and then channeled to well-deserving families. The short-term aim of Feeding the Future project is to provide essential nutrition to preschool children to ensure their development needs are met. In the longer term, once the crisis in hand has abated, the project plans to focus on other needs. On the responsibility on slide 60, very good. So in addition, we have started construction of a new Piyawara preschool. Plastic continued to remain a priority. For the quarter, 7,000 kgs or 7 metric tons of plastic was collected. We have a number of upcoming initiatives, including partnership with Cleantech, where plastic litter will be collected from public places to ensure responsible disposal of plastic waste. We have the Negombo Lagoon Cleanup Program with Clean Ocean Force, where we expect to collect about 3.6 metric tons of plastic per year. We have a beach caretaker program, Orototua Beach, which 7.2 metric tons of plastic being collected per year. We continue to work with partners to carry out reforesting and other initiatives focused on protecting the endemic species of Sri Lanka. With that, I think I spoke a lot and hopefully managed to give you a brief snapshot of what Hemas is all about, and how we did in the last quarter. Thank you.
Thank you very much, Mr. Sami, on that detailed presentation on Hemas Holdings. Next, we have lined up to you Vidul Lanka, and it will be presented by Mr. Riaz Sangani. Let me give you a brief about Mr. Riaz. And Mr. Riaz Sangani is the co-founder of Vidul Lanka PLC, presently a prominent entity in Sri Lanka renewable energy industry, and now serves as its CEO. He is a graduate from the University of Colombo. He also obtained his MBA from the Postgraduate Institute of Management, University of Sri Jayewardenepura, and is a fellow member of the Chartered Institute of Management Accountants UK, and also presently reading for the doctorate at the University of Colombo. Riaz served as the president for the Grid Connected Small Hydropower Developers Association in 2015-16 and 16-17, and also served as an ex officio member of Board of Management of Sri Lanka Sustainable Energy Authority. Presently, he serves as an advisor in the subcommittee of the Export Development Board. Mr. Riaz also serves on board of a few other private companies in diverse and related fields. From there, I would like to hand over proceedings to Mr. Sangani. Over to you, Mr.
Thank you, Dimanta. And thanks for organizing the events and giving me this opportunity to present about Vidul Lanka. Am I audible?
Yes, you are, Mr. Riaz.
Okay. Okay, so Dimanta, if you can put on the slides. Okay, so ladies and gentlemen, this is a snapshot of Vidul Lanka. We founded in 97. Now will be 25 years this September. And we got listed in 2005. Today we have a generation capacity of 186 gigawatt hours. Just to put it into a little perspective, Sri Lanka on a day needs about 35 to 40 gigawatt hours a day. So what we produce is adequate for 5 full days to run the country. And this is how our story started. We had a slow start at the beginning, the first few years, but after having listed and raising more capital, because we're in a very capital intensive industry, so need a lot of capital. So from 2007 onwards, we have been having a steady growth. Last few years has been almost an exponential growth. What you see here in the red is the projects under construction. We have 2 solar projects under construction, 2 megawatt and a 10 megawatt in Sri Lanka. And I put here pre-construction because we're almost ready to start on a 20 megawatt solar project in Malawi. It's overseas. And then you see the dotted line. Now, any of our industries, we need to work on a big pipeline, then only things materialize. Not everything what we invest, work on, get materialized. That's the irony of our industry. And that's time we end up spending a lot of money, especially if you're working overseas, a lot of money goes. But when it clicks well. So not all these projects will come in line, but we have a vision 2025 to reach 100 megawatts. So we are pretty confident that we'll be able to achieve with the project pipeline what we have. Go to the next slide. Our portfolio, it consists of mostly hydro in Sri Lanka. Our lowest portfolio is solar, but we believe that's where the biggest growth will come in the future. Most of our focus is on that. It's more easier to implement, but returns are not as great as hydro and other in the sectors. But today, most of the renewable energy industry is moving in the line of solar because it has become the cheapest source of renewable energy. This is the countries we are looking to focus. We want to put ourselves on the internet world map. So we'll be hopefully we're already operating in Uganda. So hopefully we'll be in the future operating in Zambia, Malawi, Pakistan, and few more countries to come. It's a few pictures of our projects under construction. The Vanuatu 10 megawatt is actually a joint venture with Windforce and High Energy. And like I mentioned, the Malawi, we have a 50 megawatt, the first phase of 20 megawatts. Some groundwork is done, but the real construction will hope to start very soon. Now to the crux of this whole presentation, the financials. So you can see from 21 to 22, we had growth in most of the financial indicators. The revenue, profit after tax has a remarkable increase. Our ROE has a slight dip. This is mainly because we have dollar assets, and once we translated them into rupees, our asset base went up. So that actually brought our ROE down, but it helps to expand the balance sheet. So today, our net asset value per share is above our market price. So it's good time to buy. It also helped to reduce our gearing. We have achieved the A- rating, which shows the company is quite stable. Our earnings per share also has gone up with the profitability, and our equity base also has increased due to mainly to our profits and also due to translation gains. While we work on our profits, we want to also focus on the triple P, that is people and planet. So we have a CSR arm, we call it Vidusavya. Under it, we have three separate segments. One is the Darwant Diriyak, where we try to support school children who excel in sports and academics, and even differently disabled children. So under this program, where we help our students of our employees, we also help the students in our neighboring project locations. We have also ensured that each of our staff, every child has access to a laptop. Under government area, we do carry out a lot of infrastructure development in the areas we operate. Most of our projects are in remote areas, and those communities are in need of a lot of support. So we try our best to meet their requirement. Also, we contribute a lot to the reforestation. We call it Ratata Sevana. We have a program to plant and also ensure continuity of those planting to make sure we have 100,000 well-grown trees by 2025. Recently, we added another aspect to it, where I know you might have heard of a plant called Kalapandara. It's an invasive plant. It's mostly there in the Buddhala National Park. So we have started uprooting all those plants, and even the last 6 months, we have actually cleared almost 80 acres of this invasive plant. And we are happy if anybody wants to join. We are very happy to welcome anybody who wants to join so that we can take it forward. Bundala Park has about 3,000 acres of this invasive plant. And I think that needs quite a lot of attention, so the park becomes more suitable for the elephant population there. So with all these, I want to highlight the challenges what we are facing. I think it's no secret our biggest issue is the delayed payments from CB. Now it's on a cycle of 10 months. So while we have profit, when it comes to cash, we are in a bad situation. We also see a challenge of development of hydro, because the potential for hydro in Sri Lanka is going down. All the good sites have got developed. Whatever is available will come at a higher cost. So I will consider the potential to be now less. Our other biggest challenge is the rising finance costs. While we want to grow, we need a lot of debt funding, especially being an infrastructure focus. So this is definitely a huge challenge. And I'll on the next slide explain to you how we hope to meet that challenge. And also we have an issue about rupee depreciation. It increases our input costs. But of course, we have benefited also tremendously because of the rupee depreciation, as we have a substantial overseas revenue. Actually, this is helping us more than one of the few Dendro power plants which are running, and we are continuing with it. The biggest issue is the supply of fuel wood because of supply disruption due to fuel shortages. And also there's a lot of competition now coming in with many industries shifting from furnace boilers to wooden boilers. Let me take you through how we are facing these challenges. So with regard to CB, we are continuously engaging with the CB to see how we can payments. Quite a bit of time is spent on it. And we also want to see what areas we could expand into, reducing our dependence on CB, Ceylon Electricity Board. So, and we also now looking into, we have a lot of experience in development hydro project. We have a good engineering and a project management team. So we are trying to offer these services in procurement and construction. And we're already discussing and negotiating a few international contracts. So hopefully we believe at least 1 or 2 contracts will be able to sign off before end of this financial year. To meet the rising finance costs, we are looking into, can we go back to the earlier slide? Okay, we are looking into joint venture partners with a couple of funds, which helps us to reduce on our dependency on debt capital. And with regard to the fuel wood side, supply side, we are increasing our land mass. We are negotiating with Mahaweli firm to planting of fuel wood along the irrigation channel, and also increasing on our collection center. So we hope these will all materialize and help us to have a good supply of fuel wood where we can supply to other industries also. On an overall perspective, our strategic direction going forward is to focus more on overseas. So while we are there in Uganda, we hope to add Malawi, Zambia, Pakistan into our areas of countries of where we plan to operate. We are now very strongly looking at EPC contracts where we help others to develop hydro projects. And like I said, we hope to conclude at least 2 contracts by end of this year. We'll be also prioritizing on solar, which seems to be the fastest growing in the renewable energy sphere. So we have 2 projects under construction, and both we hope to have it commissioned before end of this year. We also will capitalize on our relationship to build our business. We have good now partnership relationship with many international funders, through which we believe there will be more opportunities which will open to us. And like I said, the fuel wood supply we want to expand, because a lot of foreign exchanges goes out by dependent on furnace oil. So we want to increase the fuel wood supply in this country so that valuable foreign exchange could be saved, and also it ensure continuous supply for our plant. With regard to investment in Sri Lanka, I mean, it's fortunate that Sri Lanka is now really, the government is looking to have quite a big renewable energy target, which will definitely give a lot of opportunities for companies like us. But we want to be very cautious here, because given the delayed payment, I think we will be very cautious, and only if we see an improvement in the payment pattern, we will be looking to invest further in Sri Lanka. And like I said, the partnerships are very important for us. So this is a snapshot of the partners which we are working with. Obayashi is a big conglomerate in Japan, and then the other 2 are renewable energy funds operating in Africa. Fluid Dam is a company in Japan which is investing with us on our solar project. And locally also, we have a joint venture partner, Windforce, with whom we have 2 hydro projects and 1 solar project under construction. And we are working with them also. While we are competitors, we work together also. We believe in collaboration to expand our foothold in renewable energy in different countries. So this is a snapshot of all what I said. And in conclusion, I would like to say is that Sri Lanka has good engineering skill, and we have managed to take it to the world. And I would say all of us should capitalize on it and make sure our engineering talent is taken to the world, and bring in foreign exchange, not dependent only on sending our ladies to work in Middle East. We need to capitalize on our engineering knowledge, and that's what we are trying to do. And we will try to put the Sri Lankan engineering knowledge onto the global map. So that's about it. Thanks a lot.
Thank you very much, Mr. Riaz Sangani, for that insightful presentation. And he also touched upon the challenges that the company faced and the strategic direction of the company, which we would like to take forward that conversation in the panel discussion. And with it, we would like to go into our third presentation for the evening on Lighthouse PLC. And this presentation will be made by Mr. Sanjeeva Anthony, who is the Executive Director of Lighthouse PLC. Sanjeeva is also an attorney at law of the Supreme Court of Sri Lanka, Notary Public, Commissioner for Oaths, and a registered company secretary. He is also a fellow member of the Chartered Institute of Management Accountants UK and Chartered Global Management Accountants an associate member of the Institute of Chartered Accountants of Sri Lanka, a fellow member of the Institute of Certified Management Accountants of Sri Lanka, and a fellow member of Certified Professional Managers. He commenced his career at PricewaterhouseCoopers prior to joining Jetwing Hotels Limited as finance manager in 1996 and is currently the executive director. He is also serving on several directorates, including 2 publicly quoted companies. Sanjeeva is a life member of the Bar Association of Sri Lanka. And with it, I would like to hand over proceedings to Mr. Sanjeeva. Over to you, Sanjeeva.
Thank you very much, Dimanta. In fact, the today's theme, when I was gearing up during challenging times. So one thing which I would like to share with all the investors is that challenges will come always. When I go through the Lighthouse story, I think you will understand how much of challenging times we have started this project. So if I start with the Lighthouse, is one company among Jetwing Hotels, is a well-known brand in the hospitality industry in Sri Lanka. And we have covered from north to the east to the south to all the areas. We have basically 35 properties we have. So out of that, we have 2 public quoted companies. One is Jetwing, the Lighthouse Hotel PLC, other one is Jetwing Symphony. So today I will brief you a fascinating story about how we have started 25 years back the Lighthouse and how we have listed and what is the success story of up to now. If I go to the next slide, I am just putting our Herbert Curry, founder and former chairman of Jetwing, who was a visionary. You will understand why I am telling visionary when I start talking about the Lighthouse story with the timelines. So I can go to the next 2 slides just to see what kind of properties coming. Basically, initially we started with 80 luxury rooms with 3 theme suites and with 1 pool. And of course, spa, gym, and all kind of normal things. And going forward, then we developed it to next slide with the Jetwing Kurulubadda, with during the period. At the timeline, I will tell this whole story of this developing this fascinating company. So here we have again developed 6 rooms, 4 deluxe rooms and 2 luxury private villas. Again, it's owned by Lighthouse Hotel PLC. And thereafter, we also added additional 22 rooms. If you go to the other slide, it will be there. Okay, we have added that slide. This is the, while doing that slide, I'll come later. Until that, basically, there is, we also have a 100% owned subsidiary in Unwatuna Beach Resort, which is owned by Lighthouse Hotel. That also within this 25 years journey, we have added 21 rooms. It's a selected service hotel, and which is very popular with the, which is very much popular with the budget traveler or selected traveler. So one issue Sri Lanka was talking about is always someone complaining that rates are high. And for that reason, we have created this budget, the selected service property, which will give a low rate and you can book for basically $25–30. Okay, I'll go to the next slide. So I think this is the story which I will take a little more time. And this is a private limited company which was started in 1994, 1995. And thereafter, around 95, 96, we were planning to construct the hotel. At that time, we started with the partnership with Alis PLC at that time. And during this 1996, just before we were supposed to lay down our stone next day, previous day, there was the central bank bomb went off. So actually the whole board and we were thinking what to do with this. At that time, the chairman of Hades was Sunil Mendis, who spoke to our chairman at that time, Herbert Kure. And basically he said, just go ahead. And in fact, so that is what I told that challenging times will not be only now. So even 25 years back, it is absolute a challenging time, which basically we have decided to invest. Behind this story, no, previous slide, I'll just go through that slide a little more. And during night, I would like to share another story, which I think which will be useful to all the investors at this point of time. During 95-96, this particular land was basically we have acquired, our late chairman, and basically he was deciding to build a hotel in Galle. So then we retained some top class at that time, two firms who also advise on this. And also we were in touch with a lot of including brokers and all of the stock exchange with regard to even we were thinking of going for listing. And also I myself joined TechWing at that time. So one day there was a board meeting and we were evaluating, we were being given the task to evaluate this project by the board and headed by our founder, Mr. Herbert Kure. So during that time, we were excited. We were just got our professional qualifications, and we were very energetic, and we were analyzing all the way. And so these analyses were given independently. So I have done my analysis, and my recommendation for the board at that time was not to proceed with this project, looking at our investment, looking at the tourist arrivals, and also looking at what is happening in I acquired all the data around Galle, tourist arrivals, how many people are staying, all kind of things. So I did a presentation, and our chairman told excellent presentation, and he said, I want this kind of analysis which will help me to take decisions. So I was very happy that basically conclusion is not to go into the project. So I was not aware. Then subsequently, there were two firms also has come and given the presentation and said basically not to go in line with me. So I was so happy. So at least the professionally much more experienced than me also have recommended the same thing and all. So we were looking, board meeting was going on, and the final board meeting comes out saying that to immediately start the project. So I was absolutely confused after praising my presentation and everybody of the chairman, what he was telling. We immediately start the project and go ahead, and at that time is about close to 400 million investment. 25 years ago is a massive investment from TechWing point of view, as well as from the country's point of view. So after about a year or two, I was speaking to our founder, chairman, and asked, "Sir, I am really confused. You praised me, you told everybody excellent presentation, and you decided to go ahead with the project." Then his answer was very simple, and he was telling, "You came and presented and you told tourist stays in Galle is very low. You said tourist arrivals coming to the Galle was very low. You said the prices they are paying is very low. More and more, you and including all the others told me this story. I was much more convinced the fact that why tourists are not coming to the Galle, why the tourists are basically staying in guest houses and normal rooms, because they never had a top-class hotel in Galle. So there's a massive opportunity. More and more you all presented, I knew that there was a massive opportunity arising in the Galle area. So I think I am just sharing the actual experience from investors, how a visionary will look at the investments. We do all kind of analysis and how you interpret this analysis. So our interpretation is not to go ahead with the project, and his interpretation was based on our analysis is to go ahead with the project, because he's telling when the tourism was not performing in Galle, this is the best time to go ahead. So it's a fascinating story, and tourism is a very sensitive industry. We started when we listed, there was all the brokers were not actually supporting at that time. And they also told the same, saying that tourists are very low, rates are low, all kind of stories. And when I go to numbers, I will tell how successful was the project after 25 years. In addition to capital appreciation, we also added in 2002 the additional second pool, and 2006 this additional Kurlu bag. The 6 rooms were added from funds generated from the hotel. 2000 again. We have started in around 2011-12. We added additional 20 rooms to the original 80 rooms which we had, also from funds generated from Lighthouse. Not a single fund we have requested from shareholders. 2015, we added further rooms to the Kurlu Bag, which is again a part of property of Lighthouse. And 2017, its fully owned subsidiary, 100% owned subsidiary, which I mentioned earlier, was added. So 2022, we are completing 25 years, and in the tourism industry being sensitive, being one of the, when I go to numbers, I will explain you with the numbers, and it's one of the very much successful projects in the tourism. If I go to the next slide. So last year, we all know the challenges we faced in the tourism industry, starting from 21st April 2019, where the Easter Sunday bomb attack was the first hit to the tourism industry, was doing very well at that time. In fact, we had close to 2.3 million tourists, and which we were generating over $4.5 billion in 2018-19. When the Easter Sunday bomb attack came. Then, of course, as you know, the Corona effect, whole world was locked down. Our source markets were locked down, but still for all, we were able to survive during this without a single tourist coming on even certain months. Of course, the local market gave the maximum support to us. Then it continued. Then we again faced with now we are facing and going through the economic crisis, and also which all those challenges in 2022, we were able to maintain about 35,000 ARR at about 37% occupancy. Normally, this kind of a hotel should do about close to 60 to 70% occupancy. Kurlu Bag, being a small property, we maintained about 52% occupancy, and selected service hotel, which also worked about, normally this kind of hotel J should work close to 80-90% occupancies in good times. We were managed to work last year with 43% occupancy. So we were just coming up through 31st March 2022, and again the April, May, June, we all aware that fuel crisis, Sri Lankans could not travel. So our business during last 3 to 6 months is about close to 80% is local market. So we are relying mainly on the local market. They also could not travel. So that has affected the performance as well. If I go to the next slide, is being actually January, February, March, we were able to have a very good recovery comparatively after about 2-3 years. And we had about 79% GP margin, and also net profit of 5% compared to what we were facing during the COVID time. EBITDA margins, we were maintaining roughly 40 to 45%. We one quarter we were able to do, but if you look at overall, we were down to about 23% this year. Last year, of course, minus it's just lockdowns and coronavirus and all. But still, for all profit after tax, we also have a dollar loan where the rupee depreciation hit the P&L, and that has resulted. That is why with the exchange loss, we have made a 78 million consolidated loss. But still, without profit after tax, both properties made about 36 million loss, with depreciation also having close to about 100 million. So there's no cash loss as far as the hotels. It's a great achievement. So these 25 years, this lighthouse tourism was very sensitive. It is bounced back very fast, as well as whenever somebody talks, not only in Sri Lanka, even UK or France, we are getting affected. So Ukraine war also affected to a certain extent, but we can see some very good recoveries coming through at the moment as well. So from the history 25 years, other than the first year, other than 1 year in I think 2008 or 2009, we continued to make profits. Our dividend payments ratio was close to 75%. Majority of the time, out of that 25 years, we should have paid at least 18 to 20 years dividends, which dividend payment ratio is basically between 50 to 75%. Most of the time, it's about 70-75%. So while we were developing the company, we were able to declare dividends as well. I just looked at what is the total dividend, this 460 million investment that has been done. Up to last, we have already declared about close to 1.2 billion worth of dividends between these 25 years. So tourism industry, as you all know, is the most affected industry, being as it may be, but still, Lighthouse is a successful story. And also, as today's theme, gearing up during challenging times is basically, it is not a, yes, we are all facing, but even if you ask me 25 years ago, when the central bank bomb went, when the airport was attacked, one by one planes were destroying, we were watching from the television, our connectivity goes up, but tourism never went out, it came back. And also, I also personally believe that tourism is the way forward. We can easily bring $5 billion in a good year. In fact, today at the interim budget also, President told he's expecting 2.3 million tourists to come next year. So that is a very good way of working. That we brought 2.3 million tourists came in 2018-19 and generated close to $4.5 billion to the country. So I think tourism not generating this 4 to 5 billion during last 3 years also would have been affected our economic situation, dollar problem in the country. So we think this the government interim budget also forecasting, we also very confident that we will be able to get this at least $4 to 5 billion if we get the full potential. So I think it is a very successful financial position, although share price has come down as like most of the other industries. With the tourism industry also it came down, but we have been investment of 460 million. Lighthouse has closed here about 2.6 billion worth of reserves. Retained earnings about 60 million. Having gone through all those things, we have close to our net asset position is about 3.2 billion. So being a one hotel with one subsidiary, that is the potential of tourism. Is a high investment. Of course, the return also high. And when we get from foreign markets opening up Sri Lanka, normally in Sri Lanka, it's about 70% of the market share is foreign, 30% is local. Now it's other way around. But when that started coming up, and also with the rupee depreciation coming up, I think the tourism in rupee terms will be a very much higher revenue will coming in compared to our increase of cost one industry that will stand out during this crisis situation. So that is a very much successful story, and lighthouse gearing is about 14%, very much comfortable. And that also we obtained the loans purely because to construct our 100% on subsidiary, which we use those funds. Okay, next slide. Again, this last 3 months, we had close to 275,000 tourist arrivals, which I told January to March. And that shows that our quarter performance is in line with that. So that is in line. So I have gone a little more detail on finance. So basically, let me go to the next slide. So I mentioned again, equity 3 billion. Okay, I think all I have discussed. I will come to the mainly JetWing sustainability. I would like to go to the next few slides. And mainly we have a solar generation in our hotel with the limited space available. And also we believe going forward as a sustainable company, we have to reduce our consumption. So one is we are using solar. Other thing is much as possible, we are using now this. In addition to that, we have taken a policy decision in any of our JetWing hotels. For last 5 to 7 years, we have never served anything, no apples, no grapes, no oranges. We are spending millions of dollars to import those. And one misconception having is some of us think that the foreigners are coming here to have this foreign food. So that is a misconception from JetWing point of view, not from JetWing, even from country point of view. These foreigners will not require to eat any of those. They very well known. These kind of items are several months old. We have used all kind of chemicals to keep for these freshness, and they don't even touch hygiene guests. Don't. So basically, we have gone out from this part of sustainable. These sustainable are all. You can go to few other slides as well. These are biomass and all those things. But one thing I would like to touch in this total reducing consumption and reducing the imports. So we also not importing any of our seafood. You will not see any of the imported seafood in any of our JetWing hotels. And mind you, we also have hotels like even JetWing Lighthouse. In the season, we were selling a room at about $300-400. In fact, JetWing Villuena, JetWing Saman Villas, that kind of properties, we sell even $700-800 without using none of these. We are using these imported items. Guests are basically paying that price and they are basically happy with the food we are eating. So it is absolutely important that we use maximum possible local items. There are few items which we can't avoid. So I would say about 80% are local and 20% foreign, which to very few items which we use. For example, we are using coconut oil and all those otherwise, but we can't avoid olive oil for salads and all. There are like that. There are few things which we use, but JetWing as a part of sustainable practices, we are reducing our imports as a responsible company, and to keep these dollars, whatever we get, we were keeping over 70-75%. Our target is to even keep 85-90% in Sri Lanka from JetWing hotels. So I will not go in too much of detail of the other sustainable practices, but one thing I would, just before finishing, I would touch, that is JetWing Youth Development Program. You can go through the other slides as well. And that is where we basically take other JetWing Youth Development Project. This is the slide. And there what we do is we take children from the area and we basically train them and then we develop. In fact, one of our hotels, when they were when there's the slightest issues in the service, some of the hygiene guests were not aware that we are using this program. As soon as we explained them that how these children from the villages after A-levels, which we were waiting, we were taking them skill training. We give 4 to 6 months free training in our properties, and then we absorb them with permanent jobs. Some stay with us, some go out, but we like both, because if they go out, we will get the foreign currency to the country. So that is one important thing. Already we have about close to 1,500 children. We have already trained and majority absorbed. About 40–50% has obtained overseas jobs. And basically that is one of the things which we would love to give it to the community. Again, fire project. Community swimming pool is one thing which this care project. Community swimming pool, I will just touch that purely because this is after tsunami. With the 2 donors, Lighthouse donated the land, and we found that a lot of deaths were happened in the Galle area purely because the people could not swim at that tsunami attack. So we developed this community swimming pool, and for all the school children, we provided free of charge to learn swimming. So our objective is, if there's any requirement, even if they go to swim, go to a river, if they go to sea, even in the tsunami time, they are able to, at least we can save a few lives while swimming is the project which we have carried out. So many projects. So I would like to, I think my time is over. So with that, I think other slides also we can go through. I will not go through in detail all these organic farming, all those things, and I will not touch those. But that is our passion, and I think my time is over. If the questions are there, I will answer them. Thank you.
Thank you very much, Mr. Sanjeeva Anthony. And with that, we conclude our 3 presentations for the evening. And now it's, I think, time for what most investors have been waiting for, the panel discussion. So for the panel discussion, I would like to invite all 3 of our guests, Mr. Salmi Fasil, Mr. Riaz Sangani, and also Mr. Sanjeeva Anthony. And I myself will be moderating the panel discussion. So we'll straight away go into the panel discussion, and let me direct my first question to Mr. Salmi. Mr. Salmi, during this challenging times, we've seen a drastic reduction in terms of consumer demand and purchasing power. And with that, what we've seen is that customer purchasing decisions are weighted towards the affordability has gone down a little bit, and brand loyalty is also slightly reducing. So it's a bit of a challenge for all companies, and we would like to know how Hemas is basically dealing with this challenge. And I have 2 more questions attached to it. That is, what kind of risk mitigation methods are you adopting to basically come out of this challenge? And is there any sort of new pipeline projects that you are looking at in terms of products also in order to counter this challenge?
Hello?
Yes, we can hear you, Mr. Salmi.
Can you hear me?
Yes, we can hear you, Mr. Salmi.
Okay. Thanks a lot for the question. Sorry, there was an echo and I thought there was something wrong. I hope you can hear me.
Yes.
You're right. I mean, we did see the July CCPI going over 60%. And so it's only natural that, we have consumers to relook at their expenses and prioritizing essentials and looking for more value for money alternatives. We've also seen demand contractions in the market. Even though we operate in essential categories, we did see contraction happening in personal care, personal wash, home care, and even in the learning segment to a certain extent. What we've done is we are keeping a close tab, and we are aware of the consumer patterns and switching between brands, and our strategies are equipped to actually capitalize on the consumption patterns and therefore increasing actually our market share. So in a way, you could say that this is actually an opportunity with all these gray clouds that are around us today. As you know, we have a very strong base portfolio which focuses on balancing the cost without compromising the quality of the product, and we are in par, or I would say actually, if not better than some of our MNC peers. On Baby Sharmi and learning, sorry, Baby Sharmi and learning, parents generally share the same sentiments as Hema's, where children are provided with the highest quality products, where our focus there has been mostly get the right quality for the right price. We have also launched a lot of value for money alternatives across our portfolio to ease the burden. Like I mentioned earlier during the presentation, we have, for example, a 700-gram Diva washing powder package. We have body packs for Kumarika and Dandix, etc., etc. During the quarter alone, we also launched about 10 key new products, which obviously strengthens our portfolio and helps us go to market and achieve our share as a conglomerate in the group or as a group in the current economic context. Despite challenging times, we continue to respond to the market needs by expanding our portfolio and giving our customers mostly and the choice for upgrades while maintaining and improving on our base portfolio. I trust that should have addressed your question, Dimantha.
Yes. Thank you, Mr. Fazil. So next we'll go to Mr. Riaz. Mr. Riaz, you slightly touched on some of the challenges as well. I will still ask this question. It's regarding the delayed payments of CEB. Of course, the whole industry is obviously facing this current issue that is at hand, and I'm sure it's negatively impacting the company cash flows as well. But now recently, we've basically seen that the government has taken measures to increase tariffs on electricity and so on, and obviously there is talks of a restructure of CEB. So what is your expected outcome of this for the company, Mr. Riaz, and the industry as a whole? And also, have you seen any developments probably after July or August last year in terms of payments? What are the latest signs that you're seeing on it?
Okay. Thanks, Dimantha. I think this is something we can talk a lot about. The consumer tariff definitely increased, but then if you really see the overall situation of CEB, they were estimating a loss of about 450 to 500 billion this year. So with this increasing consumer tariff, we estimate their collection for a year will go up by about 200 billion. But then now this applies only the last 6 months. So maybe another 100 billion will come in for this year, assuming January to, we take their financial year, January to December. I think their financial year is a calendar year. So it will just reduce their loss by 100 billion, but they still have about 300 billion. Now, the situation like that, when a company, obviously the creditors get hit, especially we are the unsecured creditors. So our challenge for us, the situation it's unlikely can improve very much further. But good thing, like you said, there's a restructuring of CEB going on. hopefully that if that goes through, I think that's a good thing, because being in the industry, we see there's a lot of inefficiency how they operate. And I think yesterday a lot of debate was there on the parliament. So I'm sure you all will have picked up some things, how what's happening at CB, the number of employees, how they're managing. If I had to give you one example, the size of projects we manage, mini hydros 3-4 megawatts, whereas we manage them at 20 million a year. For them, the cost is about 100 million a year. We talk about corruption, but I think we lose more money by this sort of efficiency. So I think it's a very good thing that there's a restructuring. And in that, we are hoping that we will move out of the single buyer model, where there could be multiple buyers that will bring in competition. And then we as producers will have choice whom do we sell. So we hope if that happens, I think it is good for the industry. But the payment cycle improving very soon, I don't see. Because with the high oil prices, with the low value for rupee, the CB generation costs are going to still remain quite high, maybe around 50 rupees, 50, 60 rupees. Whereas even with this increase, the average selling price would be in the region of maybe about 30. So they will be continuously running at a loss. So I think some sort of a change of how the whole industry, all this monopoly has to happen for some good to happen to us.
Okay. Great. So hope things will improve at least to some extent. Let me move to Mr. Sanjeeva from there on. So Mr. Sanjeeva, the highest level of tourists that we've witnessed in recent years, or the highest year that we witnessed tourists is in 2018. And then this year we've seen some level of growth, basically, though it's not much, but from last year or what we've had, it's a sizable improvement. How do you see the recovery happening, and basically how are you feeling it in the hotel at the moment, and what do you expect over the next 6 to 8 months, and how long do you think it will take for us to reach another high level of tourists again?
Dimantha, now to answer that question, now we had a lot of challenges in the last few months. So main challenge we were facing is, in addition to COVID and the economic crisis which we were facing, is the queues and all kind of negative media which has been gone through in Sri Lanka, as well as whole world, including if you have put BBC and CNN, you would have been seen at that time how many queues we were there, no food, no medicine, and kind of things. So most of the foreigners have felt sorry with us, and most of our agents and some of the customers are calling and asking whether to sell food, whether to sell medicine, whether to sell this. So basically we told media is different. We have issues, yes, but people are not dying of food. And basically, we have reasonable required medicines. And so those is number one, because when you go, even if you have seen the same issue, in fact, I am not a person who watch news normally, because any news item, unfortunately, most of them, normally I used to 2-3 channels to get the balanced view. Now even I don't do that, because it's a negative mindset. So everybody says nothing, he says no, Sri Lanka is no, such a lovely, beautiful country which we have. And we all are telling that this problem, that is why I told you 25 years ago also we had issues. So we have to get together as a one team, 22 million has to get together. No point shouting these politicians and that. We all are responsible for electing them. We all are responsible for bringing these issues. So basically we have to bring our country out. So tourism that is the way we communicate to the customer. And in fact, there was a very good response. And basically, we are very happy what is happening for the last 3 to 4 weeks. And basically, even though queues are coming and going up, there was a reduction in queues, which has gone very well in the other markets. And also, the tourism travel advisories is a major problem for the country. When you put travel advisories, they can't get the insurance to come to Sri Lanka.
Okay.
For example, a little while ago, Switzerland and Norway, Denmark and Sweden removed the travel advisories from Sri Lanka. Earlier, it started with France, UK, Switzerland, and Norway, and many more countries followed, and basically diluting their travel advisories and saying that essential travel to say that caution travel that we have. So it's a good thing, and with that we expect some good recovery. And 450,000 is what you mentioned is a good recovery, and we think the recovery will be very fast. In fact, the Emirates connectivity, which they were operating for the 2 times a week, they increased to 2 times a day to 3 times flights. Now they want to increase to 5 times from October onwards. So there's a demand for Sri Lanka. There are so many other connectivity airlines are connecting with Sri Lanka. So with that, we are expecting Sri Lanka to. Indian market is slowly. Recently, about few days ago, we had few issues with regard to some comments by the Indian. I suppose that is due to different reason, political reason. But again, it's coming back. It's a new, very good market. We have not depending anything with regard to Chinese market. Now, China is closed. We expect China to be open by about November, December this year. They were closed for too long, about 3 years. Chinese tourists, actually our agents are crying at the moment. They are saying they want to travel and they have got trapped in the country and they have based a lot of people. And if they get actually 1% of that, Sri Lanka can't handle the tourism. So there's a massive potential. And as I said earlier, the government also looking about 2.5 million tourists in the interim budget. I think that will more or less it will happen. And recovery is faster than what all we think, and we require urgent dollars. I think we can bring, and next year definitely $4 to $5 billion we can earn from that, and that will give to come up with the IMF also as a sustainable debt repayment plan, which government will have a big benefit from that. And to your question, it is starting well. We are recovering. We are getting very good inquiries. Our frequencies are start going up, not from only from local, but local foreign mix is started going up slowly. And we expect faster recovery by about September, October, November, and definitely from next season, January onwards, we are expecting a very good recovery to come up the demand.
Okay. Thanks a lot, Mr. Sanjeeva. So there you go, insights from the industry, and he says that there is a recovery more than what people are anticipating, and the bookings seem to be pretty good and improving at the moment.
Yeah,
so with that, we come to the end of our first round, and let us go into a couple of videos from the Colombo Stock Exchange and First Capital, our sponsors.
The world is speeding up, and Sri Lanka is progressing with it. Succeeding in this time requires innovative strategies and a performance-driven mindset. For over 35 years, First Capital has put performance first in everything we do. We have optimized every aspect of our operation to deliver the highest performance and results to our stakeholders. As we march into the future, we are committing to elevating our services even further, moving forward with what we believe in to provide you with a premium service, delivering on our promises, finding the best solutions for our clients, going above and beyond to deliver value, and upholding the highest levels of professionalism. Rest assured, every step of the way, we will deliver performance first in everything we do. First Capital, performance first, always.
Great. Let us now start the round 2 of our panel discussion. I would like to go back to Mr. Fazil. Ms. Fazil, in regard to Hema's holdings, healthcare segment has been a key driver, and you've been significantly investing in the segment as well. And you recently commenced commercial operations of your manufacturing plant for pharmaceuticals, which is also EU GMP compliant. So what exactly is the percentage of the national demand that the Morrisons plant can cater up to? And with it, I have a couple of other questions as well. So if you look at the non-consumable diseases, does it include non-communicable diseases or the total pharmaceutical demand? Where does it exactly cater to? And are you also looking at exports?
Sorry, thank you for that question. So as you probably are aware that we Hemas operates in 3 verticals in the healthcare segment. We have the hospitals, we have pharmaceutical manufacturing, and the distribution. With pharma in particular, we work with principals to ensure the continuous availability of medication in the country. We've also introduced a number of new SKUs, especially the ones that are essentials. In terms of Mori, focusing on the plant where your question came to, yes, the Homagama facility started commercial production, and we have a production capacity for about 5 billion tablets, of which 40% of the total demand, which includes NCDs or non-communicable diseases. We continue to face challenges in the form for the buyback volumes due to various reasons, some of which I would prefer not to comment in public. But we do know that there are certain issues that need to be rectified in that particular arena. We, however, have made progress in entering into supply contract for example, to supply bisoprolol, and the government is saving dollars that it used to use to import that particular product. This product is mostly used for high blood pressure, and it's saving the dollars that it needs to actually use to import those particular products. Further, all our branded generics are launched at significantly lower prices in comparison to the market. For example, Emfa, which is anti-diabetic drug, is sold at something like 40%, which is 40% less than the identical product that's available at the market. This is mostly due to efficiencies in form of procurement, raw materials, supply chain management, and of course efficiencies in the production cycle as well. Another product that we have, which is 50% lower than the market leader, is Ros-10 and chlorpheniramine maleate, which is about 25% lower than the product than the price of the equivalent product that you have in the market. So overall, you can see that the plant is actually contributing a lot into the economy in facing the satisfying the demand for the NCDs that we have, as well as for the other products that are required in the country. The Homagama factory was built with an export focus on the long term, and we will start initially with contract manufacturing, where we will work with partners to enter into the other international markets, specifically targeting the European arena. We are, like I mentioned previously, we are EU GMP certified, and this would help us to get our leg into that particular segment in that part of the world fairly easily. We will continue to keep our stakeholders informed in the future when the strategies materialize as we go along. As you know, we just started commercial production. Setting up and starting up a pharmaceutical manufacturing plant is a long, drawn, fairly tedious process. There are a lot of compliances and approvals that need to be done, and that takes a little bit of time. So we will continue to keep the market updated as we move along each step of the way.
Okay.
I trust
Thank you. Just another question on that subject, Mr. Fasil. Now, we all know that there's a long process basically to get approvals even in Sri Lanka. So, at the current situation, what kind of capacity utilizations are we looking at during for the current financial year?
I don't think it's fair to look at it from that perspective, Dimantha, because ramping up the production of a pharmaceutical plant is a lot like a hockey stick. It's you can't go purely on the capacity utilization and saying that, okay, we've reached 20% and well done, now let's try to go to 40%. It doesn't work like that. We have the certification process is as follows. You need the plant to be certified, which we have got done. Then we need the machinery to be certified, that we have got done. Then what you do is we have to do test batches of each of the products that we continue with, that we will manufacture and launch out from that product. And that there is sort of a pipeline of products as we speak. So as and when we reach that stability study completion date, sometimes it could take 6 months, 9 months, sometimes it could take a year, depending on the nature of the product and how complex the manufacturing process is. You would start seeing the capacity utilization going up. So as of now, it's in the very, very small numbers, but it's the ramping up process that we are in that hockey stick part where we continue to ramp up. We would, if I can give you an indication, I think somewhere around 2025 is what the target is, where we would have an optimum capacity utilization level. That's what we're targeting at. Okay. So it's right now it's on that upward slope.
Okay, great. So, so according to Mr. Fasil, so we are at the initial stages and we are yet to see high growth. You can expect high growth in this segment over the next couple of financial years.
Yes, of course.
Exactly. So let's move into Vidulanka, Mr. Riaz Sangani. So, Mr. Riaz, regarding the solar power projects, I think you have about 3 projects currently underway, and my question is, now we are in basically very, very challenging economic environment, and inflation is significantly high, and you have the country is also facing a foreign reserve problem. So how confident are you in the progress or commissioning these projects? Are they according to plan? Do you think your targets will be achieved in terms of timelines? What are the overall challenges that facing here?
Okay, yes, Dimantha. Yeah, I'll keep my camera off because I think that the data level keeps going down sometime. So, so hope without the camera, I'll be more audible. So, Dimantha, like the 2 projects which are under construction Sri Lanka, we have already got down all the material, so we don't see an issue. But of course, we ended up paying for it at a much higher exchange rate, a much higher rate than what we initially planned. In fact, the 10 megawatt project, what initial project estimate of 1.5 billion has gone up to 2.5 billion, and we are discussing with CEB for some concession on the tariff calculation. There is some provision for adjusting the tariff for the rupee depreciation, but the decision making from that side is quite slow. So we are hoping that to be concluded. But in terms of implementation, we don't see a challenge because we have got down all the material for both the projects. The third project, what I think you're referring to, is one in Malawi. So that will not have the same challenge what you are suggesting. But of course, that country also has its exchange control issues. But still, we're not gone to the phase of ordering the equipment. It will be most probably Q1 next year. So let's hope situation will be in that country will be better in terms of the foreign exchange by that time. So the two projects which are scheduled to be commissioned this financial year, we don't see a problem. It's only how we will have, whether we will have any tariff adjustment to mitigate the increase in cost.
Okay.
So that's how the situation is at the moment.
Okay. Thanks a lot, Ms. Ria. So I will now go to Mr. Sanjeeva. If you take the occupancies and ARR, Sanjeeva, so we've seen 70 to 80% occupancies and lower levels of ARR, I guess, 65 to 75 over the last 10 years on average. So how is Jetwing faring on this ground in relation to occupancies and ARR, and what are your expectations there?
Dimanta, now when it comes to ARR, it's an excellent question you raised, because the country averaging $65 to $75 is a very low rate when it last 10 years average. So having said that, we had 2018 with the best year, which we 18-19, that best year which we had close to 2.3 million tourists, and we had close to 25 million room nights. So what it matters is room nights.
Okay.
So, for example, an Indian tourist can stay for 2 to 3 nights, Indian and Chinese. A German, UK, and a French guest will stay about 14 to 21 days. So you see, one guest multiplied by number of room nights is what is generating the revenue. So that is what matters, not more than the numbers. So we only talk about the numbers and say that we are happy this and that, but that is not the point. The number one is that when you have 25 million room nights, even at 2018-19 pre-COVID level, if you increase by $10, you're talking about $250 million for Sri Lanka. So the potential for the country is a 5-star island. We sell at 3-star or lower rates. So it is actually a crime for the country. So we are fighting very hard. There are so many reasons. I'm not going to blame anybody at the moment. We have to act now. So one thing is, when our conflict was over in 2009, we never positioned our Sri Lanka. We just kept tourists coming in. We were happy, numbers were going up, but our rates were not going up. On the other side, the rupee depreciation also resulted, for any tourist coming $1, they get 365 rupees, 375 rupees. So it is a huge amount, basically spending power. So there's a value for money for them is very high. So to answer your question, we are lack of positioning, we are lack of e-marketing, digitalization, which is a new trends, mobile bookings, which Sri Lanka is going. So we are very much working with the new Minister of Tourism and with the new government, and also with the Tourism Development Authority by the stakeholders. So we are working very closely, and we are working towards increasing this ARR, and purely which we have earned $4.5 billion. If we $75, if we make it $150, we are talking about $7-8 billion US. That will solve majority of our foreign currency issues. So yes, it is low. Mauritius, one example I will say, is a 3-star island sitting at 5-star rates. Okay. And so therefore, that is the situation in Sri Lanka, and we hope to arrest, of course, so many people, so many reasons for having that. So hopefully we can get our price, and tourists also will feel with the rupee depreciation higher return for their value for money. and definitely we can double our foreign currency earnings. And we think it should go to close to about $150 per night, room night, Dimanta.
Yeah. So it looks to be a very, very attractive value for money deal for tourists this moment of time at the current rates. Yeah. So let me go back to Mr. Fasil. Mr. Fasil, in terms of HEMAS, I would like to touch upon the learning sector, which is probably the Atlas company. So we've seen a significant increase in commodity prices. This probably is not applicable only to Atlas, but into probably some of the other areas as well. But then we've seen some reduction in GP margins as well. Also, the other problem that I have is some of the key raw materials here, or let's say things like paper have not been, has been identified as non-essential. And with the current Forex controls that we have on imports, Mr. Fasil, how are you all managing this current situation, this current challenge? How is HEMAS facing this challenge?
Thank you for your question, Dimanta. You're right. I mean, these are challenging times, and education, which is probably one of the key investments that we as a country can make in our future, has not faced challenges like the way we are facing today. Yes, we did see a quarter-on-quarter decline in global commodity prices, and if we see that same momentum continuing, the impact will be reflected in the margins for sure. However, we must be aware that currency depreciation and this local inflation can easily wipe out any benefits, that marginal benefits that come out from there. We probably might see that either not materializing it at the right levels or even disappearing. What we have done is we have rationalized our portfolio, so where we have given a lot of priority for the key school supplies. We have continued to have pressure groups to voice their opinion on the importance of education to ensure availability of school supplies. We expect that considerations, the government will give consideration to education, and we will see the conditions improve in the future. For the sourcing, we have dollars, like I mentioned previously, supporting the group treasury, supporting the business units with sourcing of dollars from treasury, working with the banks who are indeed very helpful to meet the requirement. We do have challenges there. We have faced a lot of difficulties, but we're working with the entire value chain to make sure that we ease the situation and face it the best way possible. One thing we're also looking at is exploring alternate opportunities as well. For example, the learning platform, and where we bring the classroom to the home in a sense, and also a high focus on the exports. So overall, a lot of challenges that we have, especially in the current times. We believe that hopefully things will improve. We have seen a marginal improvement in terms of making the availability of dollars being made available to us at the banks, so which gives us a slight a little bit of hope that all is not lost, and our kids going to school in the coming year will be available to get access to the required books and materials that they need for their education.
Okay. So also, Mr. Fasil, what about your operations in Bangladesh? Basically, we've seen that, we've heard that Bangladesh is also going through some challenging period with applying for the IMF and all that. How are you feeling the situation? How is it performing?
Yeah, so Bangladesh, I wish we were like Bangladesh, where we had more insulation from the current economic shocks that we are facing. They have a very strong, successful export sector. As you probably seen their reserves, the way they reacted very fast the moment they saw the dollar reserves dropping by, I think, 5 or 6 billion. They immediately switched on to work very closely with lenders, working with IMF to make sure that, to quote their words, we don't want to go down the route that Sri Lanka went in, very sadly. So they have reacted very fast to face the challenges. They have very little debt and very high reserves compared to the other South Asian countries like Sri Lanka. So we are quite optimistic on their recovery of the economy. In July, they approached IMF, like I mentioned, to try to show up its foreign reserves and help, the low-lying country build up resilience against the climate of change. They immediately brought in restrictions on luxury imports. They imposed power cuts or energy, because most of the energy is generated with LPG rather than actually diesel, the way we do it here in Sri Lanka. So from Hema's perspective, the demand for our key product is relatively stable. Even though it doesn't fall into an essential category, the Bangladeshi culture of almost every female having to use hair oil. On the other hand, the personal wash brand Acticept has gained a lot of traction and during this inflationary time. So I think we went into the market with the right product at the right time, which quickly helped it to grow and get market share. The market is 8 times as big as Sri Lanka. Dhaka alone is larger than the total Sri Lankan population, as we know. And as we expand, we will focus on more efficiencies from scale. We have multiple efficiency programs and initiatives in place, including SFA projects as well. Our local management team, they are actively working to understand the areas of improvement, new untapped spaces where consumer demand is quite stable. So in summary, despite the challenges that we see in Bangladesh, we believe that our business there will grow. And mostly because I think they've taken the right action at the right time to ensure that they slow down if there is a downturn in the economy, they've done everything that they can, or the right things that they should be doing to slow down that downturn.
Thanks a lot. So Bangladesh is so far insulated in terms of consumer demand and is continuing on its growth trajectory.
That's right.
So let me go to Mr. Riaz again. Mr. Riaz, now obviously dollar factor is a key element for Sri Lanka, and as a percentage of the revenue, I think even Vidul Lanka is now generating a significant portion of its revenue through foreign currency. And so how has this basically benefited your company, and also how fast do you think, Mr. Riaz, that you want to expand your presence in multiple other countries? Do we have some timelines that you have planned?
Okay, thanks, Ananta. So, like I put in of our revenue today, significant portion is from the overseas. In fact, the bottom line contribution is even more. Now today, almost 60, 65, 70% of our bottom line contribution comes from the overseas. So I think our strategic decision to invest overseas a couple of years earlier has definitely benefited us. And with the rupee depreciation, we tend to make more money in terms of rupees. But also, I must say, it also, our payment from the overseas projects are more consistent, and as per the agreement, we get paid every 2 months, except a small portion, which about a 10% of it, which has to be discussed, and because that's how the formula is set there, we call it demanage, there's issue on that. But 90% of the payment we get paid in 2 months. So I think the decision to go overseas and invest has been definitely a good decision, and which is today keeping us moving well ahead. And it is those cash flow which is helping us to invest further. We are not in a position to take any dollars overseas today with the restriction for overseas investment. So we are actually plowing back those dollars for our further investment. With regard to timeline for overseas investment, like I said, there's a 20 megawatt solar, which is almost ready to start. So that's at the pre-construction stage. So by quarter 2022, we hope to start on it. Other project, like I put in my presentation, those are on the, call it the development stage or the project pipelines. And those very difficult to give a definite plan, because when you try a couple of them, not 100, you don't achieve 100. I mean, if you're lucky, if you even get 50%, because so many challenges come and there are country risks also. So it's difficult to give a timeline from them, but we try to have a bigger basket, so at least few of them will go through, and that gives us the required our growth target. So in terms of our growth, like I showed in my presentation, our vision 2025, where we want to have a gross capacity of 100 megawatts, I think we should be able to achieve, fingers crossed.
Okay, okay. Also, Ms. Riaz, so basically, you said your 20 megawatts is broadly in line to get connected. When do you think that we can start to see revenues being generated from that coming in?
Okay, like I said, what we show is to, I mean, what we're planning is to start the construction of it by 2023, quarter 1, 2023.
Okay.
The revenues of it can take about a year from there onwards.
Okay, okay. Great, great. Okay. Thanks a lot. Then we'll move to Mr. Sanjeeva. So, Mr. Sanjeeva, Sri Lankan hotels saw a rapid growth in supply throughout the country over the last decade. So, where do you see this industry room capacity heading to? Do you feel that we are having a oversupply issue? And also, I have a couple of other questions from JetWings perspective. Where do you think you believe that your next capex areas are good? Areas should be going forward in terms of investment in Sri Lanka?
Divanta, the question is not the supply actually. Question is positioning and marketing of Sri Lanka. So, for example, if you think 47,000 rooms is in Thailand in one city, has close to about 100,000 rooms. So Thailand is having about 800,000 rooms, and they are generating close to $60 billion for a year. So that is the potential we are talking. So it's not a supply is not an issue. The question is, are we ready to market and get the actual prices justified for the properties? So I think going forward, there is a reduction of the construction and investments in tourism at this point of time. But looking at the existing companies also have exhausted with some of their reserves, including JetWing. We are not planning to invest a major investment in the next 1 or 2 years, but we are refurbishing and we are updating, because the most important thing is you have to keep up to date the product. So I think most of the audience might have visited in their lifetime a JetWing property, and you might have seen how we maintain the property. Even these during difficult times, we have been maintained. One of properties, in fact, Saman Villas, that investments were done during the COVID time, over 300 million. So there is very exceptional situations where nobody invests in tourism at that time. The basically the owners of at that time was invested believing the tourism. So that is the potential, and there will be expansions and refurbishments will be doing. But at this point of time, there's absolutely potential. Basically, even even yesterday I was in Jaffna. In fact, 3 days we were in Jaffna, and the potential that Jaffna is having unbelievable. So we have JetWing Jaffna is one of our prime properties in that city itself. So we walked all over the places for 3 days, going here and there, the potential they have, and the connectivity. Palali, there are from Tamil Nadu, there are so many connectivities, and also they are talking about opening a ferry. So I think there's a potential in the tourism. And to answer your question, it is not the number of rooms what it matters. What matters is we position and get our tourists to this country, and there is potential. And I think anyway, due to this current scenario, the investments in tourism is low. So basically next 1 or 2 years, we will see less number of rooms, and that also will give some consolidation per se. But definitely our belief is that, and JetWing believes in Sri Lanka. We had the opportunity to go outside, only one property we have outside in New Zealand. Other than that, everything investments, our 98% of our investment in Sri Lanka, we believe in Sri Lanka. We know it's the 5-star island. We know this country has so much to offer. We have lovely people, smiling people, which we do not have in other areas. That is where most of the customers are talking. So it is absolutely. So we trust, still we have the confidence. We believe these will come and go. These economic crises, all kind of things we have the planning. So I think going forward, is the positioning is what is required to get a higher rate, as you mentioned earlier, 75, which I told, to go to $150 to $100 for a night, which will make the difference for the country.
Ms. Sanjeeva, what about the MIC segment at the moment? Are you seeing any sort of pick in that area?
There's a very big potential, especially from India. And in fact, back in JetWing, MIC with the MICE market, also the foreign weddings also going hand in hand together. They come and take for their weddings go for about 1 or 2 weeks. So they are taking our hotels and our halls and everything, and they have their functions. They come from helicopters, and bride is coming from the helicopters, and there are so many rich top class Indians coming in the past. Last 2 years, unfortunately, it has stopped. Even the MICE market has stopped. But again, the Zoom and all kind of other technologies like we are doing now will definitely, otherwise we would have been in the past, pre-COVID, this would have been done in a hall, we would have been have everybody. So, but of course, we get the same thing again through technology. So definitely that will reduce that, but it does not mean that potential is not there. But India, it is from Indian, rather than traveling from one state to another state, it is cheaper for them to come to Sri Lanka, and therefore value for money, and they are getting a good service, good food. So therefore, there's an absolute potential in Sri Lanka MICE market, as well as even in foreign countries. There are weddings and there are small conferences, and because value for money it is, and also being coupled with the holiday, it is popular. But there is a challenge at the moment. But with this recovery, we expect to recover fast.
Okay. Thanks a lot, Sanjeeva. So with that, ladies and gentlemen, we come to the end of the panel discussion. I would like to thank all three of our panelists, Mr. Fasil, Mr. Anthony, and Mr. Sangani, for coming here, explaining about your companies and participating at the panel discussion. And also I would like to thank Colombo Stock Exchange for organizing this webinar series, which is a great help to boost investor confidence for the investors, and also for thanking First Capital for sponsoring this event and helping to take this program forward. And thanks a lot, everyone. We will be winding up the session with this.
Thank you very much, Divanta, and thank you very much for the Stock Exchange for taking this initiative.
Thanks a lot.
Thank you,
Thank you,
everybody.
Divanta. Thanks, everybody.
Thank you.
Thank you very much, everyone.
Thank you.
Thank you. Thank you.
Saya macam orang Singaling kan.